This episode of The Construction Record is brought to you by the Greater Toronto Sewer and Water Main Contractors Association. Clean water, our goal, our future.
Hello, everyone. Welcome to the Construction Record Podcast. I'm digital media editor Warren Frey, and this is the first of our three-part surety and bonding series. And I'd like to introduce to you.
I'm Krista Chaytor. I'm a lawyer at Weirfoulds LLP in Toronto, and I'm in the construction group at Weirfoulds.
And I'm Jamie Collum. I'm the Vice President of Construction Practice at FCA Insurance, specializing in insurance and bonding.
And I'm Malik. I'm the principal of Smartbuild Construction. We're a SaaS-based construction management software, but in my previous life, I owned a general contracting company for over 15 years.
Okay, and I'd like to start with the three. I think, Krista, you indicated you wanted to start first, but all three of you feel free to chime in. What was the need for this new 2020 document? Because the last one was in 2008. Clearly, there's been some changes since then.
Well, I think the fact that the last one was in 2008 in and of itself sort of suggests it's time to revamp a little bit. I think in large part what kind of started the idea that there need to be some changes to the CCDC too was the prompt payment legislation that was introduced in Ontario, and the document didn't address that prompt payment legislation at all. So that had to get dealt with as one issue. And then, of course, other things got dealt with as well at the same time. Some updates on safety. Insurance was something that was probably overdue to take a look at. And of course, the Ready for Takeover, and at least in Ontario, the confusion with substantial performance was something worth taking a look at as well. And then I guess, there's always little things that bother certain groups, little things that always get changed every time there are supplementary conditions. And if something always gets changed, it's probably something that the CCDC should take a look at, the committee should take a look at and make a few changes. So you see some of those throughout the new document as well.
Mm-hmm. On my perspective, from the insurance side, it had been since 2008 since that had been updated. So it certainly was due for an increase. And because it's a standardized document, the increase that we'll talk about a little bit later today affect everybody across all spectrums of the industry.
I guess I'll chime in on the contractor's perspective. It's always good to reevaluate and update documents that we're all signing to. However, if you take a look at the transition from 2008 to 2020 or 21 now, the onus is being shifted even further towards the contractor. So let's talk about balanced contracts. They've actually made it a touch more unbalanced. And given the fact that most clients can continue to write amendments to every CCDC contract, quite honestly, these are just templates for people to take a look at and hack out of and add in as they see fit. So I'm glad they added some stuff. At the same token, I'm wondering why they added a bunch of stuff.
It was mentioned that you might be using one set of documents or the other, and it's important to be aware of that when you're signing these documents or working with them. It could still be the older documents. So maybe you could go into more depth with that at anybody.
Yeah, so the older document, the 2008 version is still available and is still being used widely in the industry. And our understanding is that it will be available for download until the end of this year, 2021. So we expect to see the new version roll out more and more through the next couple of quarters of this year, and probably should be the standard document moving forward.
And I think just to add to that, two things. One is anytime you sign any document, you should probably read it and know what you're getting into, whether it's a CCDC or some other sort of contract. It's interesting that there are people who've signed the new CCDC and didn't notice that it was an updated version. So be careful of that. And then the other thing, Jamie, I think you'll get into this, but even if you're signing the 2008 agreement, the insurance change still applies. So yeah, you can't avoid that issue by signing the 2008 version.
Which is interesting because a lot of contractors are trying to avoid that as much as they can right now. And the standard assumption is that because they're signing the older contract, that it does not apply to them today. And that is a definite misconception in the industry.
Yeah, truthfully, I think even some owners are confused about that. So it may just be an issue of having a supplementary condition that changes those insurance requirements if everyone agrees. I think there's definitely some inadvertently raising the insurance requirements because no one's turning their mind to the fact that, in effect, the 2008 agreement has been amended as well.
I think essentially there needs to be a buyer beware, and the buyer being the contractor. A lot of municipalities that are issuing, or sort of say government entities that are issuing CCDC contracts, by the time their purchasing department catches up with what's actually happening in the real workplace, there's a substantial gap. And with some of these boilerplate amendments that are happening that are universal across the board, regardless of which one you sign, each contractor, subcontractor should be aware of the fact that there are a lot of rule changes. They are unilateral. And just because the purchasing department at the government entity that you're working with hasn't caught up does not mean that they don't apply. Yeah. And I think that's where you're going to find a lot of the changes, or the frustration start from, is that purchasing hasn't caught up. They're not interested in catching up because they've got their own idiosyncrasies going on. And it's really the contractor that's being shouldered with a lot more responsibility. And, you know, with these amendments or any unilateral amendments they can make, they can pick and choose the items they want to plug into your contract. Mm-hmm. And then the contractor's stuck with it. So it's important that the contractors understand what CCDC 2 2008 looked like, what CCDC 2 2020 looks like, and how it really impacts them. And understand those impacts and where it really impacts them and where it doesn't impact them.
Okay, and one of the biggest changes is the Ready for Takeover milestone. So maybe you guys could explain how that affects any part of the industry, contractors and otherwise.
Yeah, in over 20 years of building stuff all across Ontario and even outside of Ontario, funny enough, substantial performance was only a challenge really once. You know, I've just read through the Ready for Takeover procedures, and you just added a whole new layer of complexity to the substantial performance rules. That it was already complicated to understand for most small, medium enterprises. And now you've decided to say, hey, let's add some more to the list to check off of. And, you know, you're giving an outlet for the consultant or the owner to say, hey, it's not ready for takeover because this is not checked off. So the fact that it could be one or the other or all of them, I think it allows for a bigger gray area now. As opposed to saying, hey, listen, you meet the mathematical rule or you don't meet the mathematical rule. So now it's mathematical rule plus make sure you clean up all your garbage, make sure you clean it all up, make sure you've tested and occupied the facility, et cetera, et cetera, et cetera. One of the clauses that I take exception with is, you know, ensuring compliance with the permitting requirements, occupancy. Mm-hmm. Occupancy is not the contractor's responsibility. We coordinate occupancy with the buildings departments, but at the end of the day, occupancy lies with the designer. If they didn't design the building properly, or if it does not meet code, that burden that's just been shifted to the contractor, that's a big shift.
So I think one thing to keep in mind with the Ready for Takeover is, I guess, you know, I totally hear Zulk's statements about there being more issues for the contractor, and it's not the first time that I've heard it, that's for sure. But there is something good about this new concept, which is that it addresses sort of a misalignment, and again, at least this is in Ontario, between the requirements or the concept of substantial performance under our Construction Act versus a contractual issue of substantial performance. And so the idea of using a different term for a contractual milestone versus a milestone under the Construction Act, in theory, I like that because in my mind, it can resolve some confusion about whether or not you're talking about meeting requirements under the Construction Act or meeting requirements under your contract. So that part maybe is something that that the committee got right in terms of making there be a difference.
I'm going to jump in there. Where is the difference? They're still saying you have to meet substantial performance of the work. So you're still dealing with the Lien Act. And now you've added another layer of complexity, requirements for occupancy. That's the consultant.
Yeah.
So I don't know that you've cleaned it all up. I think you've muddied the water even further because everyone understood the 3-2-1 rule. It was a mathematical calculation. So it was easy. Math is definable. It's black or it's white. I mean, there's very little gray in math, but the rest of it now gets gray.
So that math still counts for the Construction Act. But it has, it was always open to people in supplementary conditions to create different rules for substantial performance of the contract and contractual remedies. So I'm not sure that using a different term for the contractual issue is necessarily a bad idea. I think one thing that's going to cause confusion, in addition to what you just said, Zulk, is that the way this section is set up requires a look back to other contract documents. So you talked about cleaning up the site, Zulk, and it's going to be, someone's going to have to go back and look and see what exactly is required in the contract documents for that. What exactly is required in the contract documents for O&M manuals. So you kind of have to, go into two places or more than two places and look at what's required. And that's sort of, in my mind, a bit of an inefficiency. Some of these things, a bunch of these things, training and that sort of thing, the manuals, even cleaning and waste removal, that's as required by the contract documents.
Yeah, but the challenge I see that's going to happen is you're going to be left at the end of a job where everyone's done playing nice with each other. Everybody really wants to leave a job. And we're not talking about the jobs that last 2 or 3 months. We're talking about the jobs that last, 6 months to 2 or 3 years. And the specs that are typically provided to most contractors are probably older than the three of us put together on the call. Sorry, Warren, don't know how old you are. So maybe
50. So no worries there.
All right. So a lot of these spec writers, I'm seeing stuff, the remnants from the 70s. And I was a twinkle in somebody's eyes in the early 70s. So they haven't updated their specs. So there's going to be all this gray area that's going to be created because this new takeover, ready for takeover procedure says, hey, by the way, take a look at these other 6 areas of the specifications. And whatever it says in these other 6 areas, those will also apply. And knowing that the problem is always with whoever's writing these specs, that's not going to catch up. So instead of streamlining stuff, you've actually now created a twisted web between the ready for takeover procedures and the people who can't write specs anyways. And listen, I'll point it out. You've got consultants and engineers, or sorry, I should say architects and engineers that have been using boilerplate specifications that are outdated. They don't apply anymore. They're not coordinated. They don't make a lot of sense. And when it suits them, if it works, use the specs. And it doesn't work for them, well, that's not what we meant. Use this part of the clause. So until somebody can go up and clean up all of those items, really, substantial performance, like I said, after over $1 billion worth of construction, I've only had one issue getting substantial performance. And I walked out of the meeting in 5 minutes. I just said, you don't want to give a substantial? No problem. Here's all the keys. And I just walked out of the building. I said, thank you. Have a good day. And you quickly catch everyone's attentions. And I'm not suggesting that people should exercise that right, but you have that right in a contract. You're not happy? No problem. See you later. We'll walk away. We'll sort it out at a later date. But saying, hey, you got to hit the 3-2-1 rule. Oh, by the way, you got to get occupancy. And I would say 95% of the times, the reason we couldn't get occupancy when we had the building inspector was a design related issue. So once again, how is that the contractor's fault?
Jamie,
Right?
what's your take on all this?
Yeah, so, well, I will say I agree with Zulk there on, and we see that a lot. We spend a lot of time going through tender documents and reading contracts, and it is not uncommon to find specifications that don't really make any sense. And I would say the copy and paste button is unfortunately a favorite tool sometimes in our industry. And so I can see where the confusion does lie here. And it's something we've heard from lots of contractors over the last couple of months is what's good in this contract for us, right? And I've had people even say, was there any contractors represented at this table? Unfortunately, contractors are typically at the buyer's whims here, right? You want a job, you sign a contract, and you have to follow the contract, and that's part of being a contractor. So it's an unfortunate reality, I think, but hopefully, I think the goal of this, and CCDC would probably agree, and Chris would probably agree, is just to provide more clarity across the board for contractors, so that and owners and consultants, really, but so everybody knows what's expected.
Mm-hmm.
Yeah, it's an interesting point, though, and all you kids out there, sounds like there's a need for spec writers if you're looking for something to go into. There you go. Who knew?
Yeah, YouTube sensations make more money. That's the problem.
Right. So maybe not, but it seems like that that may be where more of the issue is necessarily than with the document itself. But sure, for sure, there's a higher hurdle right now. There's a higher hurdle. Yeah.
Yeah. I guess the challenge is that the contract is a living document, and a lot of the references are dead documents. And that's where the challenge is going to come, is saying, hey, listen, I know everyone signs everything in good faith. They want a job, they want to run their businesses. But at the same token, I mean, you got to look at who you're doing business with. And there are some culprits in the industry that you got to say, why are they doing this? But there's no mention anywhere in the contracts, especially CCDC contract, is how do you deal with a consultant that quite honestly has made a mess of their documents? Other than, there's a dispute resolution in GC8, which the consultant gets the first crack at saying you're wrong or you're right. So they're the arbitrator of their own mistakes. And then you wonder why there's conflict.
And so from a contractor perspective, Zulq, you would prefer to see where the consultants that are involved in the design and planning stages are not the same consultants that are involved in the actual execution of the contract.
Yeah, I think there's an inherent flaw in the concept. I think you need to have an unbiased perspective of what is wrong, whether it's a contractor issue or it's a design issue.
Mm-hmm.
And you need someone that's not going to be biased. And they all try to say they're all ethical. I've yet to meet one design team that is ethical, and we're talking 20 plus years. And it seems to be they're all trying to protect their E&O.
Well, at the end of the day, it's their brand, their name, right? And so if there's an issue with their design, they have to admit they've been wrong from the start, which most of them are not eager to do so.
Yeah, I don't know what changed 20 years ago, even 15 years ago. I remember working with design teams who say, listen, we made a mistake. Let's fix it together. And somehow it no longer became together. And I think that's when you can probably see the construction litigation just go like this. Just hit a steep curve, because
for listeners, he just made a curve upwards with his hand.
Yeah, no, it wasn't a downward curve. That's why Chris is, enjoying all of this. Listen, I remember doing things on a handshake. I remember doing changes on a handshake and no one questioning you getting paid for it. I've also been involved with projects where you have a change order you've drawn against, and somehow the client thinks that they can negate the change order and adjust it. And you're going, how did that just happen? You agreed to it in principle. You gave me money for it, and now you want to take the money back?
So speaking of payment, prompt payment was not a thing in 2008, and now it is. And so, as you guys have mentioned, this has been addressed with these documents, or at least they've tried to address it. So you could go into the prompt payment legislation and how these documents are affect that.
Sure. I'm going to say one thing before Krista starts. Prompt payment's always been in a contract. The rights and remedies have always been in a contract. The question was, how did you enforce it? And the most common, easiest way to enforce it back in the day was to walk off the job site. I didn't get paid. See you later. I'm walking off the job site. Right? So it's not that there was never a mechanism to find out how soon you should get your certificate of payment and when you should expect payment by. That was always there in the contract. Now we've got a newer way of discussing why you're not going to get paid. So I'll let Krista jump in, because I know that you've worked a lot with prompt payment legislation and what can and can't be done with it.
Yeah, I mean, the issue that the committee had really was that prompt payment legislation was rolled out first in Ontario, and now some other provinces are getting it with different variations from what Ontario has. And of course, the CCDC2 is a national document. So the document itself couldn't go into the details of payment in accordance with the particular legislation of a particular province. So what the committee did was really the only thing it could do, I would think, which is point out that the applications for payment shall comply with the provisions of payment legislation, and put in various requirements that sort of account for the fact that there now is payment legislation. I think Zulq makes a great point in terms of, there always being requirements to pay and that sort of thing. And even the prompt payment legislation in Ontario itself, it's only as good as the willingness or the ability really of contractors or trades to enforce their rights under the legislation. So the fact that you have a right doesn't mean that you're going to exercise it or have the business clout to exercise it. So I expect that neither the legislation itself nor the updating of the CCDC document to account for prompt payment is necessarily going to get payments moving faster if contractors or trades don't have the clout to tell owners to comply with their obligations under the legislation or the contract. And that's always the case. Lots of times, no matter what the contractual obligation is, sometimes parties don't feel like they have the ability to enforce their rights. So the document has been updated to account for it. And the thing that I think is important and why I'm glad that the document was updated to account for it is that I think it's like many things when there's a change in an industry, the idea just needs to be socialized. It's going to take a while for the idea of prompt payment to be sort of how people think payments should be made on a project. And that's not something that's going to happen in a year or even 2 years. I think that's something that's going to happen over a decade. But every step such as this, such as the CCDC document, accounting for it is a step that works towards socializing that issue so that it becomes the norm.
I agree, Krista. Unfortunately, they rolled it out at probably the worst time possible. We had COVID. So we gave a bunch of bureaucrats another reason why they didn't have to expedite anything. I think it's going to take a few years to materialize to see how this prompt payment legislation is working. I still feel for the subcontractors and well, not so much those suppliers, but a lot of subcontractors who they don't have the level of sophistication to really take on the general contractors, or the general contractors taking on some of these more sophisticated clients. And I don't know that the prompt payment legislation at the end of the day is going to protect those people. Without naming any names, there's, a big fiasco in the industry as far as, trust money and everything else. And that shouldn't be a shocker. It's been going on for 2 decades. Everyone knew about it. It really wasn't a secret. And it really didn't stop anything since it happened. So, is prompt payment legislation a necessary tool? Yes. I almost want to say that there needs to be an advocacy group that says, listen, there's a certificate of payment issued. The money should be put into your account within a matter of 48 hours. I mean, everyone's on electronic payments now. So certificate of payment gets issued. Why does it take 30 more days to get your money? The money should just get dumped right into your account. Why should you wait 30 days? Right?
Yeah, and
I think that, sorry, Jamie, you go ahead.
I was just going to say, I think you both made really good points. And Zulq, hopefully electronic payments do start to really speed up in the industry. But I think this is what we've been seeing as well. Prompt payment is what we're almost a year and a half into this. You know, we're not seeing it widespread across the industry yet. It is taking time. And I think you're bang on, Zulq. COVID's probably given another excuse here to sort of delay the industry picking up on that. But I think it's also on the contractors. People need to fight for their rights. You need to know what's in your contract, and you need to be willing to go to the next steps and go to ODAC and adjudicate for your payments if they're not coming through. The other thing I find, you know, somewhat shocking still is how many conversations we have with subtrades and generals who don't even know that prompt payment is a thing. You know, they're still expecting to be paid within 120 days, and so if they're not aware, they're certainly not pushing for that prompt payment.
Okay, and just,
Yeah, I think it'll be interesting to see what some of the sub trades do, and whether or not they do start to enforce some rules. And I think it's going to take some specialized trades that have the clout, because there's not a lot of them available, to say, well, there's only a few of us, and you can't burn bridges with all of us. And maybe they'll start the ball rolling to help socialize it some more.
And finally, the new CCDC 41 insurance requirements. There's a lot more requirements here than there used to be. For one of the reasons that I can tell is there's a lot of stuff that wasn't addressed before, like climate change and drones and that kind of thing. So maybe you could go into some of these conditions and how they're good or bad, or both.
Yeah, okay, so I can start off with this one. I think, yeah, you're right across the board there. There's quite a few increased insurance coverage requirements and some new coverages as well. The increased limits, really it's on the general liability, automobile liability. They've doubled from 5 million to 10 million. The CCDC committee has basically said that they've heard from industry stakeholders that they've seen a lot of settlements and lawsuits coming in above that $5 million limit. I can't say that we've really seen that broadly. I don't know if Krista, if you've seen a lot of that, but that's why they've increased these limits. And then they've added in a few new coverages. There's a new contractors pollution coverage and a new drone coverage as well, if drones are going to be used on site. Overall, I think these are okay for the industry. That the problem we have right now is a couple of things here, Warren. First off, the insurance market is in a really hard place, which just means that capacity is limited and cost rates are increasing. And it's been this way for a couple of years now, and we're at least facing another year or two of this. So contractors are already facing the increased costs for all of their insurance coverages. So by doubling limits and adding in new coverages, we're just forcing contractors to take on a higher burden, higher increased insurance costs, which is challenging for all of them. The second problem we have is because we're now into the second year of this hard market, it's not easy to get this capacity from the insurance marketplace. They're not really interested in providing these higher limits to all contractors, depending on their claims history, depending on the size of the contractors. Lots of questions. It takes time, and same thing with the pollution, and the drone coverage is relatively new in the industry as well. And so what contractors are really doing right now is they just assume they can give a call to their broker and say, hey, I need these new coverages, put them in place for me tomorrow, I'm signing this contract. And the reality is it can take a few weeks here at least right now. So what we're really encouraging contractors to be aware of is you need to know, first of all, be aware of these new requirements. And then secondly, be proactive and go ahead and talk to your brokers, get this stuff priced now so that you're ready to bind it when you do get an opportunity. And as Krista alluded to earlier, the CCDC 41 document that outlines these insurance requirements, it's referenced by both the CCDC 2008 and the 2020 contract wordings, okay? And so there's a big misconception there in the industry. If you're signing the old contract, people just assume the new limits don't apply. And owners and consultants, as Krista mentioned earlier, aren't necessarily catching this at this stage. But it is a contractual requirement, regardless of which CCDC 2 you are signing. And so we really do encourage contractors to go ahead and be proactive with this.
Yeah, and I was just going to say, you don't want to end up as a contractor in a situation where you're ready to bid and then you can't because you don't have insurance in place. That's not a good spot to be in. But a worse spot to be in is if you have the contract and then you can't get the insurance in place. So yeah, make sure you're aware of it now and get yourself organized to get increased limits.
I guess from a contracting perspective, everyone that assembles a tender factors in all the costs. So unless you know what it costs, your bid probably is missing something. And Jamie, correct me if I'm wrong. I can't imagine this being for free.
Yeah, unfortunately, no. The insurance markets are not offering these coverages for free to contractors. Although that would have been a great offering for 2021, with everything everybody's been going through the last year or so. But no, costs are increasing, and Zulq's bang on. You need to be proactive and understand your pricing. You can't just assume, it's an extra $5 million, so it's going to cost me $2,000 or whatever it is. It's better to go and get your pricing confirmed so that you can carry that number in your bid.
Jamie, can you, only because we used to have a pollution policy because of the clients that we did work with, is there something that you can create as a blanket policy for the company so that they know they've got some kind of basic coverage and then they can top up, so that you can have an open discussion with your customers so they know that, listen, I'm buying it for the year, just like we buy G&L for the year and then we top it up and top it down depending on our year?
Yeah, that's exactly what a standalone pollution liability policy is. Your general liability policy likely contains what's called sudden accidental pollution coverage, which will cover, it depends on the wording, but typically it's any incident within 48 hours, right? Any cleanups and whatnot. A pollution liability is a much broader wording that will cover any pollution related incidents on a contract site. And so what most guys do is they'll carry this on an annual basis. They renew it just at the same time as they renew their GL. Limits can be anywhere from $1 to $5 million to $10 million, but under the new CCDC, it's $5 million requirement, which is high. And it's a standalone coverage, and it's not cheap. Starting point for this coverage is probably $8,000 to $10,000 for most guys, so it is an extra burden for sure.
And for the benefit of the general contractors and the subcontractors who'll be viewing this, do some of your subcontractors have to provide you their pollution liability coverage as well?
That's a great question. Yeah, so this is something we've all been talking about in the industry. So it doesn't really just apply to the pollution there. What we saw going back to 2008, and Zulq, you probably have experienced this in your past life there. When the insurance limits increase in 2008, and back then it was bumping them up from 2 million to 5 million, that quickly trickled down through the construction pyramid. And what I mean by that is if you're a general contractor and you're asking for certificates from your mechanical, your electrical, your foreman contractors, and so on, the expectation is that they carry the same limits. It's best practice for general contractors, right, to protect yourself, but it's often driven by your policy wording as well, where they expect your trades to carry these limits. Pollution is a bit unique. It probably depends a bit more on the class. It doesn't necessarily make sense for a general to require an electrical contractor to cover or carry pollution insurance, but certainly your site works contractor, for example.
Yeah, and if I can add to that, I wouldn't rule out some of these generators that are showing up on site that are holding 2,000 gallons of diesel in them.
Fair enough.
When they let go, that's 2,000 gallons of diesel that's hitting the ground somewhere, and that's not cheap to clean out when you got to bring in a crew. If I can just share a bit of insight for the contractors that are going to be viewing this, start having these discussions with your brokers. And if you can't have a discussion with your broker, find a broker that you can. And I will recommend Jamie and his team because they make it easier. However, have these open discussions with them in advance. You'll know what you're up against, and then you'll know you can review it on an annual basis. But if you wait till the last minute, I can tell you that $8,000 is probably about $14,000 or $15,000.
And the starting point.
Yeah, exactly. And most importantly, you won't bind it in a week or two. So if you bid a job, you get awarded the job 2 weeks after you've closed a tender. And part of the requirements during the confirmation of award is providing certificate of insurances and bonds. You will not have that certificate of insurance. So you can actually default on the contract by not having it in time. But if you did your homework in advance, it allows guys like Jamie to do some homework, get you your best option, because there's not a lot of choices in the pollution world, right? There's what, 2 or 3, Jamie?
Yeah, a handful of markets.
Yeah, it's a very select market, and it's not that easy to come by. And if you end up defaulting and you lose a job because you didn't provide the documents in time, well, guess what? Your bonding company's involved next. So it will have a trickle-down effect. So there is some merit to reaching out and connecting with guys like Jamie in advance and getting your pollution at least your program put in place. Whether you bind it or not, that's another question.
Yep. Yeah, and typically we can hold pricing for 30 to 60 days. So even if you don't go forward right away, you have a pretty good idea. And if you have to bind it, say in 3-4 months, you might be facing a small increase in price, but it wouldn't be significant at that point.
Okay, and finally, I'd just like to ask you guys, or all three of you are pretty passionate about this subject. Where can people get a hold of you on the internet if they want to keep discussing this?
Sure thing. So I'm at weirfoulds.com. That's KCHAYTOR at WEIR, F as in Frank, OUL, D as in Dan, S as in Sam.com. Would love to hear from you.
Okay, and it's J Collum, so JCOLLUM at FCA Frank Charlie Apple Insurance.com.
And Zulq?
For me, you can reach me at Z or Z Malik, MALIK, at SMRTBLD.com. So Smartbuild without any vowels.com.
Great. Thanks a lot, guys.
Thank
All right,
you.
Thank you, Warren.
That was the first part of our 3-part series on surety and bonding. And if you'd like to listen to previous episodes of the Construction Record, we're available on Apple Music, Spotify, and Amazon Music. And we're also available on the Daily Commercial News and General Construction homepages. Make sure to stay tuned next week for the Construction Express on Wednesday and our Friday podcast. Thank you.
This episode of the Construction Record is brought to you by the Ontario Sewer and Water Main Construction Association. Clean water is everybody's business.